Thank you so much, Conjen. Can everyone hear me?
Yes.
Okay, thank you. So good evening, everyone. It's 6:30, and we are to start the webinar for tonight. So it's Centro Rizal, Philippine Consulate General of Toronto, and the Association of Filipino Canadian Accountants presents this webinar on basic taxation for small businesses and income taxation. So this is part of our tax series. We already have the individual income tax early this year. So this would be on the other side of taxation, which is on the business side. So this webinar aims to assist Filipinos and kababayans who have been here in Canada, or those who are newly landed immigrants who are thinking of starting their own business, or who may have been already have their own business here in Canada, or the ones that you know started their business, especially those affected by this pandemic, and have ventured into the business as an alternative source of income during these unprecedented times. So, points of discussion for tonight on this basic taxation on small businesses are uh, types of ownership that we have for a business, either a sole proprietorship or partnership or incorporation. Saturday we'll discuss all of those. Uh, what are the characteristics? Or if you are a dual citizen, as I've mentioned by Honorable Consul General earlier, what are the implications of the world income? And so this will definitely help different Filipino professionals who would like to start their own businesses. Okay, so before we start, let me just do a little housekeeping. What we need to observe for tonight's presentation. All cameras and microphones will be turned off during presentation. So please turn your camera off or your microphone, or you will be turned off automatically by administrator for presentation. At the bottom of the screen, there is a chat box that you could ask all or type all your questions. Now, all of these questions will be answered after the presentations, just so not to interrupt our speaker. And then I'd like to advise everyone to please keep an eye on future webinar related to tax, because as I said, this is part of a tax series. And all contact information for our speaker or myself will be provided later on. So before I give you our Consul General, again, my name is Zaldi Perez. I'm from San Pablo City, Laguna. I'm a CPA from the Philippines and a CPA and CGA here in Canada. I've been practicing accounting for the last 30 years. So now I'd like to bring Consul General Orantes V. Castro to introduce our guest speaker.
Thank you very much, Sardi, for your kind introduction. As you may know, mga kababayan, esteemed guests, colleague in the Philippine Foreign Service, I'm happy to honor and honored to introduce to you a man of many firsts and excellent professional achievements. He placed first place in the 1967 Philippine Bar Examinations, and after graduating with high honors or magna cum laude with a Master of Laws from the Harvard University, founder and senior partner of a law firm, youngest elected delegate to the 1971 Constitutional Convention, author of the Ombudsman and the Miranda Doctrine in the 1972 Philippine Constitution, founder and senior partner of a law firm. Because of his excellent achievements in the field of law, he was one of the awardees of the prestigious 10 Outstanding Young Men, or TOYM, by the Philippines JCs. In 1980, he established and led as president and chairman of the board a successful business venture called Rudnor Capital Corporation and Brentwood Realty and Development Corporation. Last year, he presented his credentials as Ambassador Extraordinary and Plenipotentiary of the Philippines to Canada, to the Governor General or the Vice Regal Representative in Canada of Queen Elizabeth II. You know, dear friends, I never get used to introducing our guest of honor because of his excellent and unparalleled professional achievements. Ladies and gentlemen, please join me in welcoming our boss, His Excellency Ambassador Rodolfo Dia Robles, for his remarks. Sir.
Thank you very much, Ron, for your friendly introduction. Consul General Orontes Castro, officers and members of the Association of Filipino-Canadian Accountants, Mr. Casiano Martinez, who will be properly introduced, my friends, mga kababayan, magandang gabi po sa inyong lahat, wherever you may be. I thank the officers and members of the Association of Filipino-Canadian Accountants for inviting me in this very important webinar for the benefit of our kababayans here in Canada. This initiative of the Association of Filipino-Canadian Accountants will indeed benefit Filipino professionals and entrepreneurs alike, as well as their families. It will be a symposium to increase their knowledge and hone their skills, while it provides a social environment for networking via this virtual space. Allow me to applaud the AFCA for its initiative in consistently pursuing its noble mission for the, and I quote, development of its members to attain Canadian standards of competence and professionalism through the conduct of seminars and workshops and the promotion of mutual support with its members and the Filipino Canadians as a whole. I also commend the Philippine Consulate General in Toronto, headed by a very energetic Consul General Orontes Castro, for collaborating with AFCA in presenting this webinar, Taxation Tonight. Your webinar will enhance the growth and expansion of the business of our community members, especially the small and medium enterprises. Towards this end, the Philippine Foreign Service Posts have been consistently undertaking programs and activities for all overseas Filipinos, especially for women migrant workers, to clarify the dynamics of tax policies and other incentives for the promotion of business. The facts and data that our community members will take home tonight from this seminar will be critical tools in making decisions for the best use of their economic resources on hand in order to optimize cash flows. This webinar will help our business community to maximize tax savings and reach their desired profitability and growth, to abide by their business projections and their business dreams. As I have previously experienced running business my own in the Philippines, I understand perfectly how critical this algorithm in their journey towards financial self-reliance. We welcome the efforts of the federal and provincial governments of Canada in continuously improving the business tax system in order to levy tax with minimal compliance and lesser administrative cost. Together, they provide corporate tax incentives for entrepreneurs to accelerate their growth, fully aware of the impact of small and medium enterprises in the economic growth and development of Canada. On my personal note, I hope that the resource speaker tonight, the Executive Vice President of AFCA, and my province mate, Mr. Casiano Martinez, will explain public policies from basic tax to government subsidies, including financial access and spending programs, all to accelerate the growth of their industry. As my final note, I wish to express my gratitude to AFCA and to all participants in this event for sharing your time with us tonight. May all Filipino-Canadian business continue to prosper in the years to come. Salamat po and mabuhay po tayong lahat.
Thank you so much. Thank you so much, His Excellency Ambassador Rodolfo Robles. Appreciate you attending the webinar for tonight and gracing us with your speech. So right now, I'd like to let everyone know that this webinar is live simultaneously streamed over Ottawa and Toronto, Calgary, Vancouver, Manitoba, and worldwide. So right now we have more than 40 participants on the webinar. I think 46 to be exact. So without further ado, I'd like to introduce our speaker for tonight. Our speaker is the newly elected president or the incoming president of the Association of Filipino-Canadian Accountants for the year 2022-23. And I'm very proud that he is not just a colleague, but a good friend. A self-made man who worked his way through college, working with S.M. Schumart in the Philippines. He took up BA journalism from the University of the Philippines, Diliman, and later shifted to accounting at the Philippine School of Business Administration in Quezon City. He became a certified public accountant or CPA in 1988 and worked with Arthur Andersen Consulting for a year. And after that, he moved to PricewaterhouseCoopers, which we know in the Philippines as Carlos J. Valdez and Company as a senior auditor. A client has been so impressed that he was hired to work in North Africa, in Libya, and in Germany, London, in Austria, and the part of Europe, and stayed there for 13 years before moving to California, USA, and eventually landed in Canada. We're lucky that he landed here in Toronto. And in Libya, he managed more than 1,000 ASEAN workforce in the steel and oil industry. He obtained his Chartered Professional Accountant, Certified General Accountant designation here in Canada in 2011, and currently a full-time employee at an investment firm in downtown Toronto. He is the president and the owner of CZM Tax and Accounting Services, a professional corporation providing tax consulting, accounting, and financial advisory services. Sunny is also active with the Filipino-Canadian Association of Vaughan and is an awardee for community involvement given in the city of Vaughan in 2017. So ladies and gentlemen, I give you Sunny Martinez.
Good evening, everyone. Thank you, Saldip, for the kind introduction. Good evening, His Excellency Rodolfo Robles, our Consul General, Orontes Castro, himself a CPA, and everyone here at this webinar. Um, Let me share my screen. So can you see my screen now? The basic taxation for small businesses.
Yes, very clear.
Okay, before I start, I want to say my disclaimer. The following presentation and related topics are for information and educational purposes only and should not be considered a professional tax advice. Please consult a professional accountant, a lawyer, or a tax advisor who is more familiar with all the relevant facts. I will start my presentation by reviewing what we have discussed in the first webinar on the individual taxation, because this relates as well, this is related as well to the taxation of small businesses owned by sole proprietors. So for tonight, I will be discussing about the basis of taxation, who should file income tax, what are taxable and reportable income, filing deadlines, definition of business, and the different business structures. I will also be tackling or discussing about regulatory requirements and the most important decision point. Are you going to be a sole proprietorship or incorporate your business? And then we will also discuss GST and HST registration of businesses. And last but not the least, I'll be discussing about the expenses that you can claim as a business in Canada. And then after that, we will have a question and answer portion where we will be discussing or answering some questions that you may post along while we were doing the presentation. So if you have any questions, you can use the chat box, and our moderator, Saldi, will read them, and we will try to answer them as much as possible at the last part of the presentation. Okay, so I want to start with the basis of taxation in Canada. Unlike the US, the basis of taxation in Canada is based on residency. So regardless of your immigration status, whether you are a citizen, a permanent immigrant, a temporary worker, or just visiting Canada, you may be considered resident for tax purposes. And for a resident, residents are taxable on their worldwide income. So any income from inside and outside Canada are reportable and may be taxable. I want to point out at this early that SSS pensions in the Philippines are reportable and taxable in Canada. You have to report your SSS pensions, but any taxes that you paid in the Philippines can be used as a tax credit because Canada and the Philippines has a tax treaty, and that tax treaty would avoid double taxation among taxpayers or tax filers in Canada and the Philippines. For a non-resident, you must report income only. You must report income generated within Canada only. And for the deemed or factual resident, you must report worldwide income subject to federal tax and surtax and cannot claim certain provincial and territorial credits. For our purposes tonight, we will be focusing on resident taxpayers, and we will be focusing as well. Most of the topics will be geared towards sole proprietorships. So what are the things that to be considered, or what are the things that would determine your residency? So we have three criteria here. First is the significant residential price. If you have house, if you have your family here, if you have dependents in Canada, chances are you may be considered resident for tax purposes. Secondary residential ties, if you have house here, if you have you still keep your driver's license, you still have your Canadian passport, you still avail of the health insurance or the Ontario health insurance, you may be considered resident for tax purposes. And other relevant facts, there is a thing we call the 183-day sojourning rule or the substantive residence factor that will be considered when we're determining your residency for tax purposes. So who should file income tax? So we must file income tax if we have income, if we owe tax to the CRA, we are self-employed, or those on the business, and you have to pay Canada pension, CPP, or employment insurance premiums. You have a spouse or a common law partner who wants to split pension income, or you have participated in the home buyers plan and the lifelong learning plan and have repayments owing. So the home buyers plan is a program by the government where you are allowed to borrow money from your RSP and repay it in 15 years without being taxed when you withdraw the amount. The home buyers, the lifelong learning plan is a plan by the government where you can withdraw money from your RSP to further your studies, to improve your chances of being employed in Canada. So those are things that you have that would require you to submit income tax returns at the end of the year. If you have disposed of capital property, even if you don't have to pay capital gains on the sale. So I think it started in 2019 when you sold a principal place of residence, which is normally tax exempt. The capital gains on that is tax exempt. We are now required to report that, even if it is tax exempt. For our reporting purposes, we are required to report the sale of your principal place of residence or your main house in common language. And there's a penalty for not reporting that. But as I said earlier, it is not taxable. If you have to repay old age security and employment insurance benefits, you have to file an income tax. And if you have received Canada Workers Benefits advance payments, and then the last but not the least, the CRA requested you to file or demanded you to file. So there's a big difference between the request to file and a demand to file. Yung demand to file, it is, it's, how do you call it? Ito na yung pinaka matindi na request for you to file, and the CRA is really intent to require you to file your income tax. So the question is, should you file your income tax even if you don't have income? The answer is yes or no, and no. So you should file an income tax even if you don't have income if you are 18 years old and above, because when you're 18 years old, you start to qualify receiving provincial and federal benefits. So even if without income, you should file your income tax and you should be getting these federal and provincial benefits. So you'll be getting GST credit with a maximum of $290. If you have kids, you'll receive 1,473 maximum. You'll be getting Ontario Trillium benefit, it's 1,600 maximum. You'll be getting the climate action incentive, which is $224 basic plus $112 for your spouse and $56 for each dependent. And the Canada Workers Benefit, you're getting a maximum of $1,335 if you are an individual, and $2,335 if you are a family. So most of these benefits are income tested. So the higher your income, the lesser you will get. So the amounts you're seeing here are just maximum amounts. It, it may be, you may be receiving lower than this depending on the household income. So you and your spouse, your income will be added, and that would determine how much benefit you'll be getting from the government. Even if you don't have income anyway, file. Magkano lang naman ang mag-file na income tax? $100, $75, but you were getting this benefit. So if you are 18 years old and above, file if you don't have, even if you don't have income. This is, and also this is something that's always forgotten by students. If you are a student and you don't have income, but you paid tuition fee, you should file an income tax so that you can carry forward the tuition credit that for the tuition that you paid to the college or university, and that would help you reduce your income tax owing when you already have income. So any tuition fee that you paid for the year must be reported so that you can carry forward the tuition credit, or we call it the education credit, that you would get from the tuition amount that you paid. So don't forget about it, because that would be a big help when you have when you started earning income, or you have employment later on when you're done, or if you find a part-time job while studying, that would help you uh, reduce your tax owing or even increase your refund. So I have a client who did not, a Filipino, he did not care filing his income tax for since he was 18. So he came to me and he was already 23, and I just found out that he did not file his income tax when he reached 18 years old. So I encouraged him to file for the 5 years that he was not able to file a return, and he got something like $8,000 in refund. So you know even if you don't have income, file an income tax return anyway. And if you are 18 years old and over, you will get these federal and provincial benefits. Now, the question is, the 18 years old age requirement is a misconception. You don't have to be 18 years old to be able to file your income tax. You can file income tax even if you're below 18, as long as you have income. And let's take the case of a 5-year-old kid who earned money from being a commercial model or appearing in commercials. So as long as you have income, regardless of age, you have to file an income tax. So what's the benefit of a 5-year-old who earned income? What is the benefit of filing? So he would start to earn the RSP contribution limit, which he will be able to use when he turns when he grow old and he wants to contribute money to the RSP. So he will have a bigger room to contribute to his retirement plan. So there's no age requirement, but it's a must that if you are 18 years old and above, you should file. So because you will be getting provincial and federal tax credits from the government. So what income are taxable and reportable? We discussed about employment. So salaries, bonuses, commission, profit sharing, tips. If you're a waiter, be careful. If you have the habit of not reporting the tips that you receive, be careful, because the CRA will be able to know based on industry standards, and they will be able to assess if you are not reporting tips. I have a client who worked in a 5-star or a pricey restaurant, and he has the habit of not reporting the tip that he is receiving from the customers, and he was assessed by the CRA. And knowing that, 10% or 15% of the food bill is the customary tips to waiters, to the CRA assess him, and he was made to pay the income tax owing on the unreported income. So be careful about tips. And then gifts and awards from employer. So you are allowed to receive two gifts and awards from the from your employer, as long as it's $500 and below. So two times a year, you can receive tax-free gifts and awards from your employer. More than that, it is already taxable benefit to you. And foreign income, as I mentioned earlier, your SSS pension is a foreign income that must be reported in your income tax here in Canada. And I mentioned earlier that we have a tax treaty with the Philippines. Canada has and Philippines has a tax treaty, and they know that, you know uh, they would be able to check your SSS pension amounts that has to be reported in your Canadian income tax return. And our focus for tonight, self-employment. So if you have a business, provide services, plumber, electrician, accountants, doctors, nurses, or dentists, that would be called self-employment. If you are working for yourself, commission, rental, Airbnb, which is a very popular investment item. So if you have an Airbnb in the Philippines that you are renting out, that should be reported here as well. Minus, of course, the Philippine tax that you paid in the Philippines in the form of a foreign tax credit. And online selling. And I have a client here because of pandemic. So he he's selling, she's selling jewelries, and she's buying the jewelries from his friends, from her friends in Saudi Arabia and other parts of the world. And so she called me, and she said, "How can I report this income?" The thing is, she's buying the jewelries, and they are and his suppliers understating the value of the jewelries that she's buying. And they always make it appear it is a gift, but if you have shipment every month, if you have a gift shipment every month, so how can you have birthdays every month? So I told him, you are technically smuggling those items, because first of all, they are undervaluing or declaring a lower value for the jewelry. And at the same time, you know uh, to make it appear that it is a gift or a used jewelry. So this is one thing that we must be careful of. And I told my client, you are technically smuggling these things, and you should be ready to, when you are questioned by the CRA or by the government. And so if you receive benefits from your private pension, if your company has a private pension, if you receive CPP or the Canada Pension Plan benefit, old age security benefits, GIS, or the guaranteed income supplement. If you receive employment insurance payments and the CERB, the one that have been very popular during this time, those are taxable and reportable income. If you have investment income, if you withdraw money from your RSP, if you have interest income from your bank accounts or other investments, you have dividends, capital gains, those are taxable and reportable income. Support payments, if you separated from your spouse and he was required to pay you support payments, not It is taxable and reportable. I want to differentiate the spousal support and the child support. Normally, a child support payment is not reportable and taxable, but the spousal support payments are taxable and reportable, and other income. So basically, all income from within and outside Canada have to be reported in your income tax return, even if the income is from an illegal activity. If you're selling drugs, selling guns, it is reportable and taxable. But the thing is, the expense, the corresponding expense, let's say you're selling drugs and the cost of the drugs that you sold, you cannot claim that from your tax return. That's the thing. So you are allowed, you are required to report the income, but you are not allowed to deduct the expenses because the activity is illegal in any way. So those are the income that's reportable and taxable in Canada. There are income which are reportable but not taxable. So if you the support assistance payments, especially this is popular among the refugees where they receive amounts from the government when they move to Canada, like the Afghanistan or the Syrian refugees, where I have prepared lots of tax for free for to them. Those are reportable but not taxable income. So the following are the not taxable and non-reportable income. So if you won the lottery, this is tax-free and you don't have to report it. If you receive gifts or let's say your parents give you money to buy a house or inheritance, this is not taxable and reportable in Canada. Your GST credit and the child tax benefit payments, they are not taxable and reportable in Canada. If you have been a witness to a crime and you were compensated by the province, or if you were a victim of a criminal act of a motor vehicle accident, those are not taxable and non-reportable in Canada. Most amounts received from life insurance following someone's death, yung insurance benefits, proceeds of life insurance policy, if you are the beneficiary of life insurance policy, those benefits are not taxable and reportable. And then lastly, most amounts received from the tax-free savings account. So remember, this is a program by the government to encourage savings among Canadians, and any amount that you earn from your savings account, if you invest it in stocks, if you earn interest income on the TFSA accounts, those are not taxable and reportable. The TFSA account is subject to an annual limit. So I think this time it's 6,000. So it accumulates. I can't remember when it started, but it's just recently, maybe 4 or 5 years ago, when the TFSA was introduced as a tax saving scheme for Canadians. And each year there is a maximum amount that you can contribute, and that could be accumulated to date if you did not use it. So you can contribute to the TFSA account. The tax filing deadline. If you are an individual, you have to file your income tax by April 30th. So when I said individual, it means only if you are an employee or you have other income aside from business income. So the deadline is April 30th for most individuals. For a deceased person o yung namatay na, maybe I can speak Tagalog, wala naman tayong English speaking, So for a deceased person, if you died between the dates January 1st to October 31st, your deadline is just like the living, April 30th of the following year. If you died between November 1st and December 31st, you can file 6 months after the date of death. So kahit patay na, you have to file your income tax. Even the year after death, if you have a state o may mga naiwan kang properties which is not settled yet among the beneficiary, especially if you died without a will, uh, sa estate muna yan until such time the beneficiary is determined by the court. So habang the property is still there, the state has to file an income tax. Sole proprietorship or the self-employed, ito yung pag-uusapan natin tonight. So ang deadline, if you have a business, even if let's say you are an employee and as a business, your deadline would be June 15. And also your wife, even if she doesn't have a business, dahil ang asawa niya has a business, June 15 ang deadline ninyong mag-asawa. Only the spouse, both spouses will have a June 15 deadline, even if the other spouse doesn't have a business. So as long as either spouse has a business, June 15 is your deadline. But if you have a tax owing, that's the irony about Canadian taxation. If you have a tax owing, or if you think you have a tax owing, you must pay by April 30th. The question is, how would you know how much to pay? And that is the question that we have been asking. How would you know how much to pay when you haven't filed your income tax? So ang ano dyan is you can pay an estimated amount and then adjust later on. But the thing is, you must pay the substantial part by April 30th. And the tax year for individuals is always December 31st. So any transactions between January 1st and December 31st must be reported by April 30th the following year. Filing is based on self-assessment. What does it mean? Is that primarily filing is based on honesty. You estimate if you have the T slips or the tax slips, your T4 and other slips, that's a known income. But then if you think you have an income which like yung mga under the table or cash payments, or if you do cleaning services, you have to declare that. So it is based on self-assessment. It is based on honesty. Taxpayer is primarily responsible to file and make sure the information in the return are truthful and free from material mistakes. What does it mean? Is the tax preparer primarily is not liable if there's a big error or a big misrepresentation in your income tax return. It is the taxpayer's responsibility to make sure that everything is there, everything is truthful, everything is transparent and complete when you file your income tax. A lot of my clients, yung iba, pumipirma na lang without checking. So I encourage my clients to please review your income tax before signing anything, because whatever happens after when you get audited, it is the taxpayer responsibility. Although, yeah, as accountants, we help them reply or answer the CRA's assessment, and as much as possible, extend whatever help we can afford the client without violating any tax laws and regulations. And then a corporation files tax returns 6 months after year end, but needs to pay the tax owing within 2 months after year end. So again, the practice of estimation and tax planning is very essential if you have a corporation. So normally, the CRA would require you to pay installments if you paid more than 3,000 from the prior tax year. They will, and then if you fail if you fail to pay the installment, you will be penalized, and you will be required to pay interest as well on your failure to pay installments. So take note of that. So right after you receive your notice of assessment, the CRA will send you another letter saying this is the estimated income tax that should be paying for this year, for the coming year, based on your tax owing from last year. So if you think you won't be paying, then uh, you can justify your failure to pay the installment required. But then, as I said, if you fail to pay the installments required, then you will be penalized, and an interest will be uh, imputed or added to the amount that you should be paying. So I'm showing the income tax rates for 2021 and 2020. I highlighted in yellow the one that you should be mindful of, because as for tax planning purposes, our intention is to just hit the first bracket of 15% federal and 5% provincial. The ones in bracket in parentheses here are 2020 rates. So we would notice that konti lang yung nadagdag na exemption doon sa income tax brackets natin for 2021. So there might be another announcements, but before the year ends, so we're still waiting for further announcements kasi madaming promises ang liberal. So we are waiting for that in terms of tax incentives and help to the Canadian tax filers. So we're now on the main part of our presentation. If not, unless you have a question, we have here a question on the chat box. Okay. Yeah, we will answer that later on. So this is the main part of our presentation. What is a business? So for income tax purposes, it is an activity where there is reasonable expectation of profit. I highlighted in yellow the words reasonable expectation of profit, and there is evidence to support that intention. So this definition differentiate the one who's doing or just doing a hobby, or just doing things without expecting anything in return, or without expecting a profit in return. So that differentiate a business and a hobby. So I have a client who is very good in woodworking, and he would create bowls, salad bowls, that he would sell on a farmer's or on a farmer's market, or once a year during Christmas, he would sell all his creations, and he doesn't intend to to make profit out of it. And actually, he's spending more than what he's receiving from the sales, and if it's fine if he doesn't want to report that income, but then if if he reports that income, he would be able to deduct certain expenses to write up some, especially the tools that he's buying. He can write it off, and that would lower his taxable income if there is a business loss. So there is this thing that the CRA calls hobby loss. Some people have the habit of declaring a business and declaring a loss each year. First 3 years, 4 years of the business, a loss is normal. But then if you've been in a loss position for 10 years just to reduce your taxable income, that would be a red flag to the CRA. I have a client who is an employee, and at the same time a photographer, and he would do photo shoots for wedding, for birthdays, and other occasions, and he would be given like $100 for each engagement, or $200 for for gas and for his efforts coming to the event. And we claimed that, but as you know, photography is a very expensive hobby, or is a very expensive business. So he would rent lights and lenses and other photography supplies he would buy, and we claim it on his income tax return, and he was questioned by the CRAs. So we were able to defend that it is a business with an intention to make a profit, but on the first 1 year, 2 years, because when he came to Canada, what he knows in the Philippines are the old, he's still using the old photography cameras, and not so advanced cameras like what we have in Canada. So we were able to justify that he's learning to use those advanced cameras with the intention of using that for business and making a profit. So on the third year, we were able to present that the sales or the revenue is higher, and he's making profit on his photography business, and the CRA reversed its assessment. So it's a matter of proving to the CRA that you went into the business with the expectation of profit, and not just doing the business as a hobby. Okay. The definition of business for GST and HST purposes is almost identical to the income tax purposes definition, but then there's a big thing here which says whether or not it is engaged in for profit. So if you're selling a house which is not your business, GST would trigger here, even if you don't expect profit from selling your house. You just uh, selling it to buy another house. So, but for our purposes, we'll be focusing on the definition of business for income tax purposes. So, what is a business income? What constitute a business income? So, it could be a money you earn from profession. If you are a doctor, if you are a nurse, if you are an accountant, electrician, plumber, that is on the practice of trade, those are considered income. If you manufacture goods and provide services, that would constitute business income. So I want to tackle now on the different business structures that is common in Canada. And we have primarily three business structures. We will focus on sole proprietorship. It is an incorporated business that is owned by an individual. It is the simplest kind of business structure. So if you want to cook, and if you were a good cook, and because of you lost your job and you started accepting orders, that may constitute a business under a sole proprietorship. We have a partnership as well. A partnership is an association or relationship between two or more individuals, corporations, trust, or partnership that join together to carry on a trade of business. And lastly, we have a corporation, an organization, usually a group of people or a company authorized by the state to act as a single entity. And it is a legal person in legal context and recognized as such in law for certain purposes. So a corporation is a personality distinct from the owner. So it's a separate. You can regard a corporation as another taxpayer, another person separate from the owner. And in Canada, you can incorporate with just one shareholder. So there are a lot of sole shareholder corporations na iisa lang ang may-ari. Unlike sa Philippines, I think required at least 5 shareholders, if I'm not mistaken, based on what I studied years ago in my business law. So, but in Canada, you may incorporate with just one shareholder. So we will, for our purposes, we will be focusing on sole proprietorship from now on, and we will be focusing as well for resident individual who does business as a sole proprietor. Are we okay? Are you okay? Medyo nabibilisan or okay lang?
It's fine.
Fine, okay.
Good.
So we start with the first question is, if you want to start a business, do you have to register your business? The answer is yes and no, depending on certain situation. So if you are a sole proprietor and you just want to use your name, your first and last name as the name of the business, you don't need to register your business. You just need to report your business as a sole proprietor under your name in your income tax return. Now, if you're using, let's say you're doing a janitorial service and you want your business to be known as the best janitorial service, then you have to register your business. So if you're using a different name as a sole proprietor, if you're using a different name for your business, you have to register that business name. Okay, and business name registrations and renewals can be done in person or online at Service Ontario, or in person at the Enterprise Toronto offices. I'm speaking as well. I'm assuming everyone is in Ontario and Toronto. Most of us are in Toronto, so you can get a business registration online with from Service Ontario. I will showing you a link later on where you can go and get more information about business registration. So yeah, you decided to go on business, and let's say you want to have a name for your business. So you want Janice Janitorial Services. So how do we choose a business name? First, select a good name, a name that would indicate what kind of services that you're doing. Find out if the name is already taken. So you can search the internet if you can search social media, and lastly, you can do a search using the national name and databases. We call it a nuance search, and you can also search from the Canada's business registries. So what we're trying to do this here is we should avoid naming our business with using another business with another with identical name. So must so when we do a no one search, it's basically looking for a company or a business with the same business name that you are thinking for your business, and normally it will not be approved by Corporations Canada if you want to incorporate, if you will be using the same business name for your company. So one thing that you should do first is to search for the name and check if it's already existing, or the same name is already being used or existing in the province or in Canada as a whole. And then you should register your name. The link is down here. So I put the link over there so that it would be easy to you for you to go and check and register your business name. So You can register your business federally. You can register it provincially, and to be able to protect the name, let's say you want to protect the name so that other people or other entities will not be able to use your business name, it is advisable to get a trademark for your business name. So the trademark will be valid for 15 years. Nobody will be able to use it, and no other person or company will be able to register their business with the same name as yours. So it's always good to get a trademark registration for the business name that you are intending to use for the business. So to register a business, these are just the three requirements. You need to have your credit card ready. You need to have a valid email address. And like I said, if you want a name for your business, then you should do a no one search so that you can be assured that no other business with the same name is existing. And so the no one search would cost between $8 to $26. To register for a new business, it's $60, and $60 as well to renew. It will be valid for 5 years, and you have to renew it before it expires. So when you register your name, your business name, you will get a master business license, profile summary, and a payment receipt for the payment that you made. I want to note that if you are serving food, if your business is about serving food, like madami tayo nagsisimula ngayon na nagluluto, tumatanggap ng order, ng delivery, your business must be registered in Ontario, and as well as you must be licensed by Toronto, by the City Hall of Toronto, and your premises, if you are accepting dine-in, must receive a pass status by Toronto Public Health in order to operate. Food handler certification is also required for anyone who serves and handles food. In the same manner, if your business has something to do with performances, authorize performances, or communicate music to the public, you require a SOCAN license. It's a Society of Composers. It's just like, getting a copyright for the music or that you will be using for the public. So these are the business specific municipal regulations. You can take a picture. And I want to state that regulatory requirements could either be federal, provincial, and municipal. So it's up to you to know whether your business is regulated by the federal, provincial, or municipal regulators. So I'll give you like 1 minute to take picture of. Okay, and I have another link here. These are the Service Ontario phone numbers if you want to call them to register your business. And you can also search ontario.ca and get access to the electronic services to register, renew, and report your Ontario businesses. So we will now come to a point where we want to decide. So you started your business and it's doing well, and you came to a point where you want to decide, should I incorporate or continue doing as a sole proprietor? Okay, so remember the tax rate that I showed you, the first 49,000. If you are an employee earning like 50,000 and you have a business earning like another 40,000, so if you added them together before any deduction, so your income would be 80,000. So you would be on a higher tax bracket, right? So remember for as a good tax planning activity, our purpose is to maintain your tax bracket on the lowest possible rate of 15%. So if you have 80,000, your employment of 40 plus business of 40, you would be taxed on a higher tax bracket. So that's not good tax planning measure. So one thing to uh, to consider is to incorporate your business, right? So the income would be split. So you'll be paying tax on the 40,000 and pay 15% on the 40,000 from employment, and the corporation will pay the income tax corresponding to the 40K. And what is the income tax rate in Canada for corporation? It's between 9% and 15%, provided you are a Canada-controlled private corporation or a CCPC, which is generally the kind of corporation that you would get if you are incorporating your business and using the small business deduction limit. So the government is encouraging people to do business, and a part of incentive to corporations is the small business deduction, where the first 500,000 of income is taxed at a lower tax bracket. So your first 500,000, you can use that to, to limit or to lower your income tax. So if say your company is making 40,000 each year, so it's like 12 years you will be paying, and provided that you are earning the same amount of income, so you will be taxed at the lowest tax bracket. So it's between 9% to 15% corporate tax rate. So in-split natin yung income, and that is one good measure or good thing to lower your income tax. Mag-incorporate ka so that the other 40,000 will be taxed to the corporation, unless compared sa you have the whole 80,000 under your personal income tax return. Uh, so you will be paying more taxes. Okay, so one of the main consideration for incorporating is the corporation being separate legal entities. You are not personally liable for the business, financial, and legal liability. So let's say your corporation was sued and you were required to pay a big amount of money. They can only go after the corporation's assets. They cannot go after your personal assets. Like if you have a house and you are operating as a sole proprietor and you were required as a, after, because you were required to pay, let's say, a client who filed a case against you, they can go after your house. They can go after your bank account. They can go after your personal assets, because if you are a sole proprietor, your liability extends to your personal assets. Unlike a corporation where it's limited to whatever assets that the corporation has. So this is one big advantage of incorporating your business. So for a sole proprietor, it's simple and quick to register. you enjoy control over decision making, ikaw lang decide, no need for a board or a shareholder approval for any decision that the business needs. And you can deduct business losses from employment income and passive income, which is rent or interest or dividends, helping you to remain in lower personal income tax bracket. And then there is a low startup cost if you start your business under a sole proprietorship. So what are the risks and considerations of a sole proprietorship? As I said earlier, you're fully liable. If your business incurs debt, you are personally responsible. They can go after your personal assets. If your business becomes super profitable, it means you're personally pay more taxes. So dadagdag yung business income mo sa employment income mo. So ang taas ng taxable income mo and you'll be paying more taxes. Unlike if you split the first 40 in your between your individual or personal tax return and the business, they incorporate for the corporation's income, you'll be paying lesser taxes. And also, if you are a sole shareholder or a sole proprietorship, it's hard to obtain financing. So most banks or financial institution would be inclined to approve a loan application if you are an incorporated business than a sole proprietorship. So what are the advantages of incorporation? So as I said earlier, corporations are separate legal entities and owners are not personally liable for the business's financial and legal liabilities. So as I said, they can only go after the corporation's assets if you are made to pay or if you have a debt to pay in the course of business. And you have a potentially lower corporate tax rates, provided that you remain a CCPC or Canada-controlled private corporation, availing of the small business deduction of 500K. You'll be paying something between 9% to 15% for CCPC. And raising capital from investors and financial institution is easier. So as I said, the banks and financial institutions would be more inclined to grant loans if you are an incorporated business. And this is one thing that is good too. Business or the corporation has unlimited lifespan. So kahit patay ka na, the corporation will continue to operate provided you have good people there. Unlike a sole proprietorship, pag namatay ka, patay na din yung business, right? So it's a good estate planning as well, and a good legacy and estate planning as business theoretically exists forever. So kahit patay ka na, the corporation may continue operating using other people or other your family member, and it has a lifespan that exists forever, like 50 years corporate life. You can give it to your kids so that they have a business or source of income when you die. And you can also sell your corporation easily. Also, you can sell shares of stocks if you want to obtain more money for operation. So it's easy to raise funds because you can sell shares of stocks to the public or to your friend or to any business partner that you may want. And the consideration and risk for incorporation, it has stricter regulations. You'll need to ensure all paperwork is in order. You are required to meet at least one a year, and you need to have your minutes of meeting available if they want to inspect it. And setting up a corporation is more expensive than a sole proprietorship. So right now, if you incorporate federally, you're about to pay $200. I forgot the exact amount, and you have to pay $200 filing fee with Corporations Canada. If you if incorporating provincially is more expensive, if you incorporate in Ontario, it will be something like $360, I believe. I don't have the exact amount, but it's more expensive to incorporate provincially. So I do incorporations as well. So what I'm doing is I incorporate my clients federally first and then apply for provincial accreditation later on, which is free in Ontario. So you just have to pay the $200 filing fee to Corporations Canada. So, and also a federal corporation has more protection against other businesses using your name, because Corporations Canada is stricter when it comes to having two corporations with similar business names. So I encourage my clients to incorporate federally and then apply for a provincial license later on. So as a federal corporation, you can operate within Canada, the whole of Canada as well, provided you do a provincial application to operate in each province. While if you are just a provincial corporation, which is more expensive, first of all, to do, you'll be limited only to the province where you were incorporated. So that's one thing that is good about federal incorporation. And next one, there are a lot more paperwork involved with corporations, including yearly documentation that must be filed with the government. So there is an annual return requirement, just think $20 or $12 to pay, where you are required to update Corporations Canada if your board of directors, if your mailing address have changed. So that is one requirement that is not present. I mean, you are doing a sole proprietorship. Next one is including shareholders and directors opens up potential for internal conflict. So if you started or you allowed or you sold shares of stocks to shareholders, and you have the board of directors as well. So having more people may open up potential for internal conflict. So you might have different opinion, different decision, different personalities. Unlike a sole proprietorship, where you are the only one deciding for the business. It has its good and bad part, but then I'm still uh, will off to incorporation. And lastly, you will have to maintain ongoing paperwork filings to continue to run. And as well, I would like to state that it's more expensive to file a tax return, a corporate tax return, than filing a personal tax return. So it could be like 3 times, 4 times more expensive, but considering the tax savings that you will get if you incorporate and the protection of your personal assets, I think incorporation would still be a good option. It's up to you. Um, every situation is different, but looking at the personal protection side, if you incorporate, I would off for incorporation. Okay, so you started the business and your business is doing good and you may be required to register for GST. So the question is, do I need to register for GST or HST? Depends as well. So if you are, the first question is, what are you selling? Is it a taxable supply? Is it zero rated supply or an exempt supply? So most services are GST or taxable. The only thing that I would like to mention is if zero rated supplies are usually basic groceries. If you're selling milk, bread, and vegetables, or agricultural products in their unprocessed state, even chicken or pork in their unprocessed state, that's zero rated. Okay, but once you process the meat, like ginawa mong tocino, ginawa mong longganisa, it will be now a taxable supply where you have to uh, charge GST. So these are the zero rated supplies. So milk, bread, vegetables, agricultural products such as grain, raw wool, dried tobacco leaves, most farm livestock, so chicken, pork, beef, in their unprocessed state, like hilaw na karni lang talaga siya, that's 0% or zero rated supply. Also, most fishery products such as fish for human consumption, pero yung goldfish subject to GST. So fishery products for human consumption is zero rated. Prescription drugs is zero rated. So yung gamot natin, walang GST yan. And also, most medical devices such as hearing aids and artificial teeth, feminine hygiene products, and export. So if you are exporting goods or services outside Canada, of course, it's zero rated. And transportation services where the origin or destination is outside Canada, it's zero rated. So there's this thing that we call exempt supplies. So, oh wait, I forgot to mention. So if your business is zero rated, you can still, so you're not paying any HST, you're not collecting any HST on the sale. But then if you pay for expenses, you bought office supplies, you bought machinery, you can claim the ITC or the input tax credit on that payment. So most likely you will have a refund each time kasi wala kang you did not collect HST on the sale, but you paid HST on the expenses. So most probably you will have a refund each time you file your GST return. Compared to the exempt supplies, so what are these supplies? A sale of housing that was last used by an individual as a place of residence. So if you sold a house or you as a principal residence, principal place of residence, it's exempt from GST. If you rent a residential accommodation or residential condominium, and it's exempt, and most health, medical, and dental services performed by licensed physicians or dentists for medical reasons, these are exempt. The only thing here is, so when you so you're not supposed to collect GST or HST on the sale. At the same time, you cannot collect the input tax credit on the expenses that you paid. So wala kang makukuhang refund sa gobyerno. So it's just you don't on the same time you don't have to file and you don't have to register for GST. Let's say your business is sale of taxable supplies or zero rated supplies. So when do you have to register for GST? There is a threshold, I should say, where you are required to register for GST. So you have to register for GST, HST if you provide taxable supplies in Canada, and at the same time, you are not a small supplier. So who are the small suppliers? If you are earning 30,000 and below, you don't need to register for GST. But the moment you hit the 30,000 during the year, you should require you should apply for a GST HST. and you should call the CRA and tell them you want to apply for a GST. It's can be done online. In a minute, 2 minutes, you will have your GST registration. So the moment that you have the GST registration, you should be billing your clients or add 13% to your sales. And then at the same time, when you pay for expenses, you can claim the ITC or the input tax credit on that expenses. Or even if you buy fixed assets, you buy machinery equipment, the ITC on that is refundable to you. So you have to deduct it from your GST owing, and whatever if you have more expenses than revenue, chances are you will have a refund from the CRA. So the threshold amount is 30,000. So take note of that. Maybe on the first few months of your business, kung hindi ka maka 30,000, you don't have to register for GST, HST. But once you hit the 30,000, you must register for GST and HST, provided you provide taxable supplies. So this is for illustration purposes only. This is the sales tax rates by province. And the ones in yellow, ang tataas ng kanilang sales ng GST, HST. So what is the difference between a GST and HST? So GST is a goods and services tax, and HST is the harmonized sales tax. When you say HST, so the federal part and the provincial part are blended together. So the federal part is 5%, and the provincial part, in case of Ontario, is 8%. That's why we're paying 13%. So if your business sold an item to a resident of Alberta, you must bill your client 5% only, because the place of supply role is where the user of the end user of the product is residing should decide the GST that you will be billing your client. Okay, so we're still lucky because if you would see New Brunswick, the ones in yellow, they have 15% HST. And Quebec has 14.975, which is basically 15% already. And Ontario has 13. So if you happen to be in Alberta, mag-shopping na kayo doon so that you will be paying 5% GST only. But there is a self-assessment rule there. But as you know, for small purchases, if you happen to be in Alberta or Nunavut, wala ka namang mabibili sa Nunavut, saka mahal ang mga bilihin. If you happen to be in Alberta, it's good to shop there because the sales tax is lower. Okay? So we're almost at the last part. So what are the business expenses? But this is the most interesting part. So what are the business expenses that you can claim from your business? So first of all, if you are in the manufacturing business, so the cost to manufacture the products is a business expense. So if you, let's say you're cooking, you're operating a food business, so you know the cost of the food, the raw materials, the salt, sugar, toyo, mantika, everything, the meat is cost of production or business cost that you can claim as a business expense. Capital expense, this is the most forgotten part. If you bought a laptop, a printer, a phone, you can claim capital cost allowance or depreciation on that fixed assets that you bought. You cannot write it off 100% on the year that you bought it, but you can claim deduction through capital cost allowance or depreciation to lower your income tax. This is another thing that is always being forgotten. The business startup cost. If you paid an accountant, a lawyer, on someone to incorporate your business, or you did some research, you paid you paid someone to do the research, or if you bought a book that you made as a reference, or the income tax act, or the income tax an income tax book, you can claim that as a business startup cost. Or if you're already operating, you can claim this as, you know, as another expense. Another thing that's always missed, the business use of home. So if you are, let's say you're a cook, and you are operating a food business, so the use of the kitchen at home could be claimed as a business expense. So what constitute the that business use of home? So here, if you're using like myself, I also do accounting and tax practice at home. So the area that you occupy is considered a business use of your home. And depending on the area of home that you use for business, it's just an estimate. It's like if you're using one room of your house and you have four rooms, you may claim 1/4 or 25% of your home space for business. So you can claim heating, electricity, home insurance, maintenance. If you are, if got renovation of the house, that would form part of maintenance. Hindi yung major that is capitalizable. Mortgage interest, property taxes, you can claim them as business use of your home. So let's say, yeah, let's say if 25% of all your home expenses could be claimed. Kung nag If you're using your kitchen, mas malaki pa. You can use your kitchen. You can claim more, a bigger percentage of your home space for business. So what are the non-deductible expense? Ito yung hindi pwede talagang i-deduct sa business. Lobbying expenses. If your business is would require you to lobby for favors and and favorable decisions to, if you are after a favorable decision like a political lobbying expense, it's not deductible. Political contributions are not deductible, but you can get tax credit if you donate to a political party. Government fines and penalties, tax. If you are late in filing your tax and you get penalized, you cannot claim that as business expense. If you get a traffic ticket, you cannot claim the traffic ticket as part of your automobile expense. Illegal activities, bribes and kickbacks, if you know, hindi masyadong ano yan dito, I don't know, pero hindi ko pa na-experience sa Canada na may mga bribes and kickbacks. Those are uh, non-deductible expenses. So these are the typical business expenses that you can claim. This is actually coming from an income tax form. So hindi ko na isa-isahin. Some of these are self-explanatory. I just want to focus on or to mention about meals and entertainment. So makikita nyo there's a 50% limit on the meals and entertainment expenses. It is based on the fact that whenever you eat with a
Daniel?
client, yep,
I think we passed the time for the webinar. Can we move on to answering some of the questions, or
yeah, I will be quick. I will be quick. I will not discuss everything in here. So if you're going to dine out or to take out clients in a restaurant, make it a habit to put the name of the client at the back of the receipt, and you can only claim 50% of the amount that you paid. If you are a long haul truck driver, yung nagda-drive ng malalaking truck between Canada and US, bringing food, bringing supplies and other products, you can claim 80% of the amount, and you can claim $23 per day as meal allowance times 80%.
Okay. Can we start
You
with a
can also,
Q&A or answer some of these
yeah,
questions,
one
Sunny?
more, one more. Motor vehicle expenses. So if you use your car, so you just estimate the business use of the car, and then you can claim gas, insurance, license and registration, maintenance and repairs. Maintenance and repairs would be the actual repairs. A car wash or a change oil is the maintenance expense. And you can also claim amortization of your car. If your car is on financing, you can claim depreciation on the car, but it's limited to 30,000. So even if you bought a Mercedes Benz for 75,000, you can only amortize 30,000 of the car. And if you are leasing the car, you can claim $800 per month maximum. I think
Is that
so.
it for now?
Yeah.
Okay. Thank you so much, Sunny, for that very informative discussion or presentation. I have a couple questions here that I'd like you to address with our audience tonight. Let's see. Okay, I don't know if these are all related, but it's asking, one of the participants is asking, if I continue paying Philippine government agency contributions for SSS and Pag-ibig, can I include that as deductible expense? What about housing loan in the Philippines, either through Pag-ibig or bank financing?
Okay, so if you're renting, if you're earning money, or if you have your house there being rented, you can claim as that as expense in your Philippine tax return. Oh, wait, let me. Okay. So the question is, if I continue paying Philippine, basically no, you cannot claim that as a deductible expense, not unless you have a business that is related to the, if you bought a house in the Philippines and if you are renting it out, so you can claim that in your Philippine tax returns, and whatever net income from that rental property in the Philippines must be reported in Canada minus the foreign tax credit for the taxes that you paid in the Philippines.
Yeah. Okay. Thank you. The next one here is says, I hope I'm not mixing up information. The Philippine Teachers Association of Canada was incorporated as a nonprofit organization back in 2017. I believe there was part where the presentation said a business name has to be renewed every 5 years through nuance search. Does this apply to us?
Maybe the 5-year renewal is the business license, but you're not even required to have a business license. You are a not-for-profit organization, and I think the question is confusing. So
I think
yeah, as
I
a not
think
a not as a not-for-profit organization, you're not even required to have a business license.
yeah, I think he's concerned about the master business license, which I
Yeah.
know is being renewed every 5 years.
Yeah, but
I don't know if that's something related with nuances he's asking about.
yeah, but this is a not for profit, so this is not in business, and they are not
Yes.
required to get a master business license.
Okay, next question is, how are tax deductible expenses on the use of home different on registered business versus sole proprietorship?
Basically, it's the same. If you can claim use of home for your business in both sole proprietorship or in a corporation.
Okay. And there's another one here. With single owner incorporated, does the business claim these expenses a reimbursement to the owner? So it's asking, if the single owner is incorporated, does the businesses claim these expenses as reimbursement to the owner? I
Well,
think
if the owner paid for the expenses, the corporation may reimburse
Reimburse, yes.
the owner. Yeah,
Yeah, I think so too.
and
Yeah.
the corporation can claim the expenses.
Yes. Okay. Here's another one, and I believe this is the last one. It says, if you have three type of businesses done at home, will the taxation be filed each during the home expenses categorized as three or separate for each type of businesses? Thanks.
Okay, so if you have three businesses, you are required to make three reports for the business. You cannot combine them all together. So let's say you have a food business, at the same time you do, let's say you are an insurance agent, and the same time another business, you must prepare separate reports for each business. So
But
in your, you,
Sunny,
yep.
yeah, this is Heidi. How are you? Heidi
Oh, I'm good.
Kabuyaw.
Yeah.
Yeah. But then do I separate all those expenses, or it's one, let's say 25%? Do I divide it into 25, or if you have two or three types?
Okay. So the first option is to separate them.
Separate
Like
them? Okay.
if this is for insurance, this is for real estate,
Yes.
this is for, so but I know it's very, a difficult task to do. You can combine them all together and prorate according to the revenue that you derive for each business. So let's say you have 30,000 on the insurance, 20,000 on the real estate, and another 20. So that's 70,000 revenue. So
Yeah.
you prorate the expenses according to the revenue that you generate for each
Is
business.
there a maximum for using the home expenses portion, or can you do, let's say, 50%, or is there a maximum?
No, there's no maximum, there's no minimum, as long as you can prove to the CRA that I'm using this
Yeah.
space for
Yes.
business. You can do measurement, you can measure the floor area, the one that's being occupied by your business, and as long as you can justify with
Justify.
the CRA
Okay.
the business use of your home,
Yeah.
then
But
it's
it has to be
fine.
done separately.
Yes.
Yeah.
I think as long as the claim of expenses are reasonable and you can prove it once
Okay.
you file your taxes, that's what we're looking for here.
So
Okay.
those are individuals. Okay. Thank you very much,
Thank you very
Sunny.
much for your questions. Thank you so much, Sunny, for enlightening all our participants tonight. For the information that's very helpful for those of us who are going to start our business or opening up a business, registration wise and everything. So for now, this is it for tonight's webinar. I'd like to bring back Honorable Consul General Ron Orantes.
Anyway, I would like to thank first our resource speakers, Mr. Sunny Martinez for his very informative presentation tonight, and also for Mr. Saldi Perez for being our moderator. Of course, first of all, thank you very much again to His Excellency, Philippine Ambassador to Canada, Ambassador Rodolfo Dia Robles. Thank you very much for staying with us, sir. I think despite we have overshot our time allocation, when I was also studying in college, I almost wanted to. This is one of the subjects that I usually wanted to skip when I was in college. But anyway, thank you very much to our two friends from AFCA and all our participants. And as a way of saying thank you to them, we are presenting them these certificates of appreciation to Mr. Casiano Martinez and Mr. Saldi Perez. So in behalf of the Philippine Consulate General in Toronto, we would like to thank again our two resource persons from the Association of Filipino-Canadian Accountants. Maraming salamat at mabuhay po kayong lahat.
Thank you po.
Thank you so much.
Happy Thanksgiving, everyone.
Sir,
Yes, thank you so much.
Ambassador,
everyone.
sir, any last word, sir?
Naka-on ba ako? Well, first of all, I'm very grateful to my province mate because I've learned much about taxation in Canada. There are some differences between our taxation in the Philippines and taxation here. But I realized that the system of paying at different times would be a very helpful system. Kasi in our country, you pay all on one deadline, so that everybody is crowding the office of the BIR. And maybe that's one idea I can bring home, thanks to our guest speaker. But I can see that knowledge here is power. So that if you don't understand, let's say, how to report your taxes here, you're always being harassed by deadlines. It's very, very hard to think of something you don't know. So your presentation, Kabayang Martinez, will really enlighten everybody's mind and perhaps do not feel harassed by the deadlines. Thank you very much.
I want to add as
All
well,
participants.
we usually have a free income tax preparation clinic each tax season, and we are working with the Philippine Consulate in Toronto. Yeah, so for low-income families and taxpayers, we are offering free income tax preparation services. You just have to contact the Philippine Consulate office in Toronto to avail of that service. So it usually happens during March and April. It's the tax season here in Canada. So yeah, if you are a low-income taxpayer, you can avail of that free service, free tax preparation service.
What is low income, Sunny?
Well, it's being defined by the CRA each year. So depending on the guidelines of the CRA, so I think last year is 30,000. So if you're earning 30,000 and below, you qualify
Yeah.
to have your income tax prepared for free.
Yes, normally these are geared towards seniors and
Yeah.
unemployed people who have
May mga
very low income or just on welfare or just a little
student,
bit of pension.
yeah,
Students as
students,
well.
saka yung mga bagong dating, yung first time
Yes.
mag-file na wala pang
First time
income.
filers, yes.
Yeah.
So we always do those tax clinic. CPA does it as well. So thanks that we're going to be offering it through our consulate office in Toronto and the AFCA clinic, tax clinic services as well. So again, thank you very much, everyone.
Mr. Salvi, the ambassador is asking, will ask a question.
Okay.
Yeah, I have a question because I was telling my group here, would it be violating a line of propriety if I put your presentation, Kabayan, in our website?
Well, it's recorded. It is already like the first webinar series that we did. The recording is available through the Philippine Consulate website, right, Konjan?
Yes, it's available, sir. So, yes, sir.
Already available.
It's public.
All right. So
Yes, sir.
that makes it easier. Thank you.
Yes. Thank you. Thank you, Ambassador. Thank you, Konjan. Thank you, everyone, again for joining us tonight. And I would like to see all of you again and more participants in our next tax series webinar. Again, thank you and good night.
Good night.